Welcome to Trading Lounge and the Australian report for Wednesday, April 20th. So our wave 4 to 5 is going along quite nicely, and I think that, well, it's going to be pretty obvious that we're going to have problems at this level here, because of this double top here. Double tops are never the end of the trend, so that's something good. What I don't know yet is that, as I've mentioned before, I don't know if this move up here is an A and a B and a C wave for this wave B here. Yeah, so it's possible because sometimes you get triple tops, and as W.D. Gann would say, it would be the fourth. If you get a triple top, it's the fourth time that it cracks through or go through. So both of those were Gann's. Double tops are never the end of the trend, and if you do get a triple top, it will be the fourth time it will go through. So we just got to see where the US markets fall at this point. They're not, they've got a bearish count that I haven't eliminated yet. So I've got a bullish count and a bearish count, and in about 2 sessions I will know what we've got. But in the meantime, we need to be a bit careful. So if you're long, taking your money off at 76 is good, and 76.30 and 76.50. You might get up to 76.60, but this is group 2 here now we're talking about, so 76.50 and 772. So we may push up there. I'm not sure about this wave 4 here, because this trend here is a little bit sort of iffy, so I can't really read it. I don't know if I should put this on top over here. Now these here, they look like up for 1, back for 2, up for 1, back for 2, and the third wave sort of moving off here, but I might have that wrong. This might need to go over here as some sort of triangle pattern. I'm not quite sure about it. Look, it will probably just push up much higher, but I don't know that for sure. So you need to find a way to protect yourself at this point. What I can say though is that this move here, it's in 5 waves, 1, 2, 3, 4, 5. So it does appear to be the third wave. It's strong, isn't it? So it's probably the third wave. So that would leave this here as wave 1 here, and 2 here, and 3 here, and 4 here, and 5 here. And that would probably be in line with the US markets, because the US markets were going down, over a couple of weeks, whatever. And then we looked at the low being in yesterday, which I just got lucky on that. But the move up on the US market, I'm calling that wave A. It could be wave 1 of a bullish market, but I don't know that yet. And then we're going to get Netflix had a bad hair day, so the earnings were down, and then so that will be the B wave. That's not quite completed yet, that move down. It'll be in 3 waves, and then we're going to have because we've got 5 waves here in the US, we're having a correction. It started. The wave B has started, and then we'll have wave C. So I don't know if we go down from that point, or we start to build that trend to the upside. There is wave 1, and this is 2, and this is 3 and 4 and 5, and building as a bullish market to the upside. I don't know which one we've got. There's a good case for both of them. So I'm playing both hands, and we've come up with strategies to be long and short, and we'll refine those tomorrow. But yeah, it still leaves this situation here. But if, for example, if it's this one here, then that means, and we get a strong move down, well then, it's likely the Australian market will move down. Yes, they have been out of sync. Ours is held steady all this time here. That's been correcting sideways. The US market has been diverging and moving down, and we've had that move up yesterday and last night, and Netflix had bad earnings, and that's part of a corrective move that needs to play out in 3 waves, and then we'll have that move up here. So while I was looking for the low here, and I figured, well, our market's in a different is out of sync with the US markets, so we should just sort of continue up, and while this is going up here, it will enhance it and push it up, and it has done. But the US markets have got this to go and this to go, so that means like us having some sort of move here and then another move here would be about right. Now look, there could be more. If we get that 5 waves up, there could be more. But all I can say to you for the US markets is that we're going into this, we've got the first leg in the B wave here at the moment, so we need a bit more, and then we've got this here. So we've got, looks like we've got 5 waves up. Yeah, sure, it can push up into that, you know, the 76.50 or whatever, but look for a correction and then one more, and that's about as far as I can get us. You know, we can move the stop up a little bit. It should really go under here, but we'll just put it up a little bit higher. Well, what we can do, let's just imagine that for a moment that is the 3rd wave there. That means the 4th wave, if there's going to be one, let's just assume that it pushes up a little bit higher. So the 38.2 will be on top of that move there. So that's exactly right there. So that's good. So let's just plonk that in there and then get rid of this. And then just draw that line through there. Could have done that anyway. So if we keep the stop out of the way and then look to take profit, you know, in this trend here. So yeah, I don't know how this all plays out here. You know, I've looked at it as this is wave 1 and 2 here, and then looking at this as wave 1, 2 here, but it doesn't really produce it from this point here. I mean, it's got this sharp move here, which 1 and 2 doesn't really sort of fit. It's like another wave 1 and 2 and 1 and 2. So we could go up a lot further. You know, when we look at CBA, for example, we're still looking for that to take out the top there. It's moving along, and we could look at that as 1 and 2 and 1 and 2 here. So really that needs to, I mean, I've got to be conservative, so that needs to go there. But I don't really have a nice 5 waves here. If I was going to count that, that would actually be there, and that would be there, and this would be 1, 2, 3, 4. Can't even get that, mate. Not even. Well, if I should just play it out the way I see it, unless that's 1, 2, 3, 4, 5. Yeah, I'd have to leave that at that. I won't do that. That's just embarrassing my own intellect. It's not hard to do. So we're just going to do at least this here. And that kind of puts it in line with the US markets as well. So today, we'll look, this would be like wave 1 and 2 here, and this would be a 3rd wave. So we'll see that to go up there, and then we'll see this sort of pull back and find support, and then a move up into there. That would be reasonable. That would be, I can sort of work with that. I mean, as Peter Lynch would say, it's always good to sell into the trend. So either here or further up, depends on how far you want to push it, I guess. But yeah, anyway, the main takeaway is we've at least got this, so we should get that in here, as I explained, and that would tie in with the US markets as well at that point. So I think we'll just run with that, and we'll just see what we get, you know, at that point. I think today, if we can just take a percentage there, that would be great, and then we can look for taking profit tomorrow on that, you know. Depends on how you want to sort of play it out a little bit, but I'll leave it at that. And yeah, so we've gone over CBA, so that's cool. Now the commodities have sold off across the board, so we've seen gold sort of hit one of the hardest. Now we've seen gas come down, iron ore's pulling back, uranium's pulling down, but we knew that anyway. That was okay, that was in line with what we're doing. We're seeing copper come down. So we're seeing the commodities go into correction. We're still seeing the US dollar push, the US dollar index push above the 100, which I don't think it's got very far to go. But how that plays on the commodities, I don't think it's really playing that hard on. I think there's bigger issues out there on all of that. When it comes to iron ore here, I just can't see it being finished, you know. I mean, I just see it as being corrective. The 38.2% retracement level for this market comes in here, and this correction has just gotten bigger. So we'd have to look at this as the A wave here, and then 3 waves for the B wave, and then down for the C wave here. That may spike down a bit lower before it goes off again. I mean, I didn't think we'd be spending much time there, but anyway, this doesn't matter too much. But it shouldn't finish off like that unless I've, that's a low there. The only other way I can sort of see this is, I mean, that's just made a new low above here, because the first thing that drew my attention was wave 1 and 2 here, and 3 and 4 and 5 up here, which would make this, all of this up here as wave 1 up here, and then we would pull back deeper into this. So it's a possibility which would take us lower at that point. So we'll just plonk it in there. It's okay to sort of shoot the breeze and look at these things and whatever. I mean, it's a bit of a long shot, but that's, I mean, I was originally going to count it like that, but then we got this little weird dude here. But that was 5 waves down here, wasn't it? Yeah, so that's not going to be right. So I'll just remove that. But so I'll leave it like that. So we're going to see a softness in the iron ore market now. So one of the things here is that the market's come up and hit the level, it's had a reaction here, and now it's kind of got its first high above the level. I've counted 5 waves in here, so maybe it just keeps on going up here. That would be fine. I do need to point out that the US markets is approaching, this is $50, and so we'll be approaching $80, the ADR. So yeah, we're approaching 80 here. So that means that this market is definitely going to be spending time here, and there will be profit taking coming in at this point. Maybe this has got a better count. That's 5 waves. That's so that's 3, 4, 5, and that's the top of the third with that and that. So that's 1, 2, 3, 4, 5. I think we're okay. This still could be, this high hasn't made out here. That could be 5 waves here. So we may get something like this in the US. So that, and this would be in line with what's basically happening in gas and gold and all those sort of things. We're looking for 5 waves down. So that could be at that point. I can't get 5 waves from here to here, you know, it doesn't sort of fit for me, so there's still more upside to go here, but that 80 will play out there in that. So we're going to see, we've got the arrival, we're getting the reaction now, then we need the first high above the level. So there's a bit of, you know, it has work to do here. So that means that we could end up coming back down here and so on in that regard. I don't know, but it doesn't sort of fit with my wave count, but I've been wrong before. But you know, as a classic trading levels pattern here, we got the arrival, we've got the reaction, we've got the first high above the level, so we may just get that, you know. So you need to sort of figure out what you would like to do with your positions. If you've got some in here, you might just want to put a stop in here and call it a day, you know. That's the sort of thing that you could do. And the same with Rio. I mean, I've counted 5 waves up here, and then a correction and this, but it could be wave 4 here and then wave 5. And if that's the case, or an A and a B and a C wave, a very short C wave, yeah, very short C wave, so I don't think we'll go that direction. But the worst situation that can occur here, and it may not, and maybe just be panicking, but that would be, whoops-a-daisy, this one down here for that. So it could pull down to this space here. That's probably the worst that could happen. But I'll just stay with this, I think, as 1 and 2 here for the moment. And the FMG here, we've had this little B wave here, because I can count wave 1 and 2 here, then 1, 2, 3, 4, 5. So it's just 3 waves up. It's a little bit high for the 61.8%. It's even probably higher than the 78.6, but it still doesn't matter. It can come to 1 point within that, and in fact a B wave can take out the top there. So this move up here can be the B wave, and if that's the case, it could come down for a C wave here before going up. So you might want to think of doing the same thing again. I don't know, because as a wave 4 here, that current low sitting on 21 is the 38.2% retracement level from here to here. So you might, you might be panicking, you might be doing the right thing at the right time here. I'm not quite sure, but the commodities are definitely correcting. I don't see iron ore going down very far. Even if you don't get out here fully, it might be worthwhile taking something off here, We've already taken something off here, but now we can see, if we had just nipped out that top there, then that would have been fine. So we may, we've already taken a percentage at this point, but you might want to take some more off at this point. And yeah, so it's just a shame. If it had taken that top out there, then we would have had 5 waves to the upside. We'll see how it goes today. But anyway, look, if you want to protect some money, then, you might have we've hit it pretty hard. So, we want to take some of that. We don't want to let it turn into rubble. So, gold. It does appear that the sharp move down here really cements in the case of having the B wave here, our alternative count that we've been talking about. We've been looking at wave 1, but I don't really have 5 waves up there, and we had this as a wave 3 up here, but even as a wave 4 here, it's overlapped the top of this wave 1 here. So we need to leave this now as the alternative count. But that also means too, it's rather a complicated correction here. So I had it as wave 1, so I need to remove it as wave 1 and have it as wave 3 because it's more complicated than a wave 2. Should be a simple zigzag correction, basically an A and a B and a C, and that's it, clean and tidy, not having a complicated larger correction like this. So what it does mean though, it's a very high probability now that we're going to be coming lower. And that means that we've got wave 1 in, so we'll look for wave 2, and then we'll have wave 3, 4 and 5 coming into play. That's what it looks like as a wave 4. The only way I can be wrong is looking at this as wave 1 here and 2 here, then wave 1 and wave 2 here, but we're pretty close to the 50-60% retracement level for that anyway in here, and we've already got 5 waves down here. That's 5 waves into, that needs to go there. So we'll be looking for an ABC to come back up, probably hit the lower end of group 2 here, so 65, 72 and 80 in here. So I think that we should put that in there, 72, close enough. That's all of group 2. That will be the resistance at that point, but we can see that because it's captured all of this over here before, so it's going to be the resistance, the shoulder or whatever over here for that. But that looks like the case now for this. So that in mind, we need to look at GDX. So as you know, with GDX, we're looking for a wave 1 top there. Now this little move in here, I tried to look at it on the 100 tick chart. I can count it as 5 waves, but it's kind of like, it's just a bit messy. So, but I knew that this move up here would be, we'd be looking for the top. We've been talking about that. So we definitely have to put that in there now. So in this case, this is the 50-60% retracement level. Will it come down this far? Well, I don't know. I mean, as I mentioned before, we've got wave 1 here and group 1 and group 2 here, and it normally holds the market. So we'll just see how it goes. We'd probably need to look at that as wave 1 here and 2 and 3 and 4 and 5 here. So we still need to see an A and a B and a C. It might just do something like that, you know. But that's sort of where we are for this, and we expected that, you know. So that's it started now, this thing. So it creates opportunity. And that leaves our Newcrest mining here. This is a weekly chart here. We normally look at the daily here. We can imagine coming up to like 28 is a profit taking number, and then we got 30. So, you know, if it reaches 30 without being affected at 28, we've got this old high over here as well. Excuse me. But the reason I'm showing this chart for is two reasons. Is first of all is not to lose hope in the correction, because we've got wave 3 up here with an A and a B and a C wave here. So this is a corrective pattern, and I really like the lazy C wave here. That just sort of is fantastic. So yeah, I mean, we'll probably need to look at this as wave 1 to the upside, and also look for a wave 2 here. And the second reason I'm showing this for is because of the volume here. This, you know, for a trend to be a trend, it needs increasing volume. It doesn't matter if it's in going down or up here. So in this instance here, from here, we can see that we've had increasing volume in here, and we can see on this turning bar here that we've got this big volume bar here. So that's all profit taking. It's pushed it up for the week, but it's also you know, been profit taking at that point, and the market's come back down. It's okay. So we've seen this whole trend move up here for all these weeks, moving up, but the volume decreasing. So that's divergence, and your indicators would show that. So it's likely, if we put this in line with everything else, we'd put that here and that there, and we'll probably see it come back. Will it come back that far? I don't know, but that's the starting point here. So we'd be looking for an A wave, a B wave, and a C wave here. It may not come back as far, but the good news is that that would all have to be wave 1 at that point. I mean, I did have this as wave 1 and 2 here, and then wave 1 and 2. So we may not come back that far, but I do need to point it out. I've got positions in this market, and I'm not getting out. I'm just not getting out. I'll just see it as an opportunity, because I'm looking at this, you know. So yeah, this is, you know, it takes courage to stay in a trend and to build in, but, you know, as the new word, buy the dip, whatever. So anyway, we'll keep an eye on that, but yeah, looking at this volume here and this here, it's going to come back. Maybe not as the same as the other markets, but we'll see. Okay, and now the Australian dollar. So with the Australian dollar, we've got 5 waves down to this point. Then we have the A, the B, and the C. So I've got it as wave 2 here, and then we can look at it as down for 1 here, and then I would need to look at this here now as the A wave here, and the B wave here, and the C wave in here. So if I count this down here as wave 1, and then we look at that as the A wave and the B wave and the C wave, then we will look to go up here for this, and then we'll come down hard here. Now, I don't know, we talked about protecting things here yesterday, okay? So I can't remember exactly what we talked about, but obviously taking some sort of profit here and so on. But what I want to talk about today is that, let's just say that this down for 1 and back for 2 and down for 1 and back for 2. Let's say this downtrend is correct. that means that we can short under this low here. You could probably take that up to about here somewhere. But I'll just leave it here for the time being, but just to let you know that. Wave A should have some sort of same equality in terms of length to this here, so we should expect this to actually move up higher here before coming down. I'll just remove these. So yeah, so that's that. Now I've got this as wave B here, so if that's correct, then this would be wave C coming down here, and that would be the low in place. Just looking at both sides, you know. The US dollar's got to pull back at some point because it's above 100, so it's I can see that it needs to pull back. That might give this an opportunity to move to the upside. Now I would look for the first high above the, after 5 waves here. I can see we got wave 1 in here, and I can see this is wave 1 here and 2 here, then this is 1 and 2 and 1 and 2 here, and going up into the third. So we've got a bit of time up here, but I'll just leave that out of the way. But eventually what we'll try to do with this, if it's going to be bullish, we will look at it in terms of that top there, and then this top here, and we'll look at being on the long side at that point. Plonk that there and there. There. So we're basically covering both bets here. If you've taken part profit here, then this also needs to be the stop over here as well. So if I just copy this here, so the market goes up here, right? Say if you've still got short positions, the market, you want to hold on, the market goes up here, has that first high, comes down, has the second high, and then that's where the stop would go, on top of that second high. Because if it was going to fail, then this would go to this point and then fail at that point. It's either going to do that, or it's going to go up at that point. So you might as well be long at that point there as well. Alrighty, I'll leave it all at that. Thanks for tuning in. Cheers.